Hi folks, David Waring here again with InformedTrades.com and your All the Data That Matters report for November 27th, 2007. Lots of action overnight, the biggest of which being news out of Citigroup that they've obtained a $7.5 billion cash infusion from the Abu Dhabi Investment Authority. Shares of Citigroup rallying on the back of this news, as this obviously shows a lot of confidence in the Abu Dhabi, in the bank from the Abu Dhabi Investment Authority. This makes the Abu Dhabi Investment Authority the largest shareholder of Citigroup with a 4.9% stake in the bank. What's interesting about this deal from sort of the downside perspective for Citigroup, or what it shows about the bank, is that Citigroup has had to pay 11% yield on the securities they've given the Abu Dhabi Investment Authority, which are eventually convertible into stock, and this yield is currently double what they're paying their existing bondholders. So this sort of shows how desperately in need of cash Citigroup is. Two-year treasuries fell to their lowest level since 2004 on the back of this news. So the infusion, the $7.5 billion infusion by the Abu Dhabi Investment Authority, having wider ramifications than just Citigroup. Traders hoping that this will assist in the cleanup of the subprime mess. Business confidence in Germany and France rose unexpectedly from the IFO report. This is especially interesting considering that business confidence rose in the face of a much stronger euro, which a lot of businesses in Europe have been complaining about has been hurting their profits, and also higher oil prices. ECB President Trichet, along with Luxembourg Prime Minister Juncker and EU Affairs Commissioner Almunia, are in China to discuss the yuan exchange rate and what they're calling the rising tide of protectionism against China as a result of the yuan exchange rate. The yuan traded to its strongest level since the peg was lifted in 2005 on this news. In Asia, the Nikkei is up 0.58%, followed by the Hang Seng, which is down 1.51%. And finally, South Korea's Kospi up 0.24%. In the Forex markets, dollar-yen fell to its lowest level in 2 years on the back of the Dow sell-off and news from China that they are considering one of the ways that they're considering diversifying their reserves is by buying Japanese securities. Obviously, if China decides to buy Japanese securities, that's going to create a demand for yen, and the size of the reserves that they have make this very bullish for the currency. The Dow relationship to the Dow and why it would sell off or strengthen, why the Japanese yen would strengthen on a Dow sell-off is a little more complicated to understand, but it all basically comes back to the carry trade. Traders having to liquidate their carry trade positions if the Dow is selling off to cover margin calls on the Dow, and just general on the back of general or people willing to take less risk and therefore not taking as many carry trades or liquidating the carry trades that they have, which they sold yen to fund other currency pairs. Now they're having to buy those yen back, creating a demand there for yen. Dollar-yen rocketed back up 100 points off the lows on the Citigroup news. You can see the effect there. Traders expecting that to have a positive effect, or at least to put a dent in some of the negative effect of the subprime mortgage, and expecting a little bit of an increase or a decrease in risk aversion as a result of that, and possibly new carry trade as a result. New carry trades put on as a result of that. Consolidated price action, the euro-dollar overnight. This chart is looking like euro wants to break out to the upside in general. If you see a big run-up like this and then a tight consolidation, it normally means a continuation of the trend. So a lot of traders are looking at 150 as the next level for the yen. Currently, the next level for the euro. Currently, euro trading at 1.4885, dollar-yen trading at 108.02, and pound-dollar trading at 2.0707. U.S. market sold off significantly yesterday with, if you remember from yesterday, initially we thought the numbers out from Black Friday and the start to the holiday shopping season were very positive, with store traffic increasing 8.2% over last year. As the day wore on, however, traders started to look a little deeper into these numbers, and what we found was that Although store traffic had increased, the amount that people were spending on average was decreased by 3.5%. Also news after talking to some of the retailers, what they were saying is they were having a very hard time selling things that were not on sale. So the concern is that shoppers came out en masse to buy their Christmas presents at a deeply discounted price, and they're going to kind of be done for the shopping season. So we're going to kind of have to wait and see as the shopping season wears on how slow it is actually going to be this season. But if the sell-off in yesterday's market was any indication, fairly slow. There's a great analysis from InformedTrades.com put out on yesterday's close on the technicals of the move. I'm going to be posting that on my blog, so be sure to check that out. And on the economic calendar, the S&P Case-Shiller Index is due out at 9 a.m. Eastern Standard Time. Is expected to show that housing prices fell for the third consecutive quarter in Q3. The Consumer Confidence Board's the Conference Board's Consumer Confidence Survey is due out at 10 a.m. and is expected to show that consumer confidence fell to the lowest level in 2 years. Also on the calendar for today is the Richmond Fed Manufacturing Index for November, due out at 10 a.m., and Fed Governors Plosser and Evans speeches at 12:20 and 12:30 respectively. In the commodities markets, both gold and crude oil off their highs from yesterday, currently trading at 96.92 for crude there and 826.50 for gold. That's our report for today. We hope you'll join us for tomorrow's All the Data That Matters. As you have any questions, please feel free to visit us at InformedTrades.com, and have a great day.